Hey, how's it going, everyone? Welcome to the Debt Hotline. I'm Brandon with Team Solo, and I'm here with Nick. So, before I let Nick introduce himself, I will give a little bio on him. So, Nick is the president of iLending, where he leads the company's national strategy, sales, and partnerships with more than 20 years of experience in finance and automotive lending. He's helped transform iLending into one of the largest auto loan refinancing providers in the country. Under his leadership, iLending has expanded to over 250 employees nationwide and has been recognized with multiple Best Place to Work awards. Nick began his career in the mortgage and automotive finance industries, giving him a deep understanding of how loans impact everyday households. At iLending, his mission is simple: help drivers save money by lowering their car payments through smarter refinancing options. So today, there's no surprise, we'll be talking through how to lower your car payment as we kind of pick Nick's brain on all things auto finance. Nick, without further ado, I'll let you introduce yourself and cover anything I missed.
Well, pleasure to be here, Brandon. You did a pretty good job so far. Just with the auto refinance business, yeah, we've been in it for a long time. We were one of the original companies that started doing it. We've been doing this since 2006. iLending got started up, so we've definitely seen all the highs of the industry to the lows of the last few years with the interest rate fluctuations, and obviously, as well, the rate cuts that are in the news today. We're looking to see some return to the refi next year. So this is great timing to help some families.
Great, great. Well, before diving into some questions that people have already submitted beforehand, would love to pick your brain a little bit about iLending and your experience with that. So, if you could just tell the people listening a little bit about, what is iLending and how does it work?
Sure. iLending's a national auto loan refinance company. Our goal is to help people save money by finding better terms on their existing car loans. And so we have a network of trusted lenders and credit unions that we have nationwide. And our loan consultants will match each customer with the refinancing options based on their unique situation, the credit, income, the vehicle, whatever the personal goals may be. Our goals simple: lower your monthly car payment and interest, and make it easy without the hassle.
Nice, nice. And for the listeners who aren't too familiar with auto refinancing space, what exactly is car loan refinancing and how does that work?
Yeah, refinancing a car loan, it simply means just replacing your current car loan with a new one. Usually, ideally with a lower interest rate or better term, or in a perfect world, you get both, right? It's very similar to refinancing a mortgage. We look at your current loan balance, your credit. We look at the value of your vehicle. If you're approved, the new lender pays off the old loan, and you start making payments to the new lender, often at a much lower payment.
Mm, that makes sense. Something that I think a lot of listeners would like to know and came up a lot is, how do they know if their current loan is overpriced, right, and is worth refinancing?
Yeah, good question. I mean, you never really know, but until you dive into it, right? But if your interest rate's 7, 8, 9, 10% or higher, especially if your credit's improved since you first got that loan, there's a good chance that we can save you money on your current loan. Um, Sometimes if you're just simply struggling with a high monthly payment, that's a red flag for you too. Hey, how do I save money? With the cost of living these days with gas and food and car insurance, well, most families are running their home budgets more like a business, a small business, right? How much money is coming in? Where can we cut? How much money is going out? And that's where the refinancing can really help. When we work with the consumers, we like to offer you this is a free, no obligation assessment to let you know, hey, does this make sense? There's plenty of customers that come to us, and I'm like, hey, you're in a pretty good situation. So there's no point in doing something. So we'll let you know either way, whether it makes sense for you or if it doesn't.
Yeah. Can you take the listeners through a little bit more about what that process really looks like and kind of maybe speaking with someone like you and getting advice on whether or not they should look into refinancing options?
Yeah. So when a consumer contacts us, we just start by, one, assessing their goals. What are they trying to accomplish? Sometimes it's a matter of, I just want a lower monthly payment. Some folks are trying to pay off their car faster. Some folks, they're saying, I just need some relief to put some groceries on the table, right? So we can help them skip a month or two of payment. So that's always a possibility. We've had folks who have recently been through a divorce or separation and they remove somebody. So there's so many different reasons that would lead to the refinance. So we can certainly help with those. So we start with the goal of the consumer. We find out where they are right now. How much do they owe on their car? Who's their lender? What's their interest rate? What are the payments? We talk about their current job. It's a standard credit application. And then we put it into our machine. And that has all the programs built from all of our network nationwide. And it may match someone who lives in California with a credit union, out in New York by you, Brandon, right? I mean, so they're all over the place. So it's really the best match for that consumer. And we present them with the options and say, you have option A at this term, option B at this rate. And we just work with them to select the one that fits their family's needs the most. You do all the paperwork virtually. It's all digital, which makes it very easy. And then they're off to the races with the new loan.
Hmm. I know you said that it's a standard credit application. What kind of maybe documents or details should people who are considering refinancing um, their loans, I guess, prep before meeting with someone like you?
Sure. They definitely would want to have, obviously most folks know how much money they make, so you want to know your income. You want to know your vehicle information. So you want to get the most value for your vehicle, the most accurate we can. So for that, we want your VIN number and your current mileage on your car. And then through the process, documents that are pretty standard that we'd have someone send in or pay stub, registration, copy of your driver's license to prove your identity, things like that.
Got it. That makes sense. All right. Well, let's dive into some questions that were submitted by listeners. So, Maria from Texas writes, I have a car loan at 11% interest from 2021. My credit score has gone up since then. Would refinancing actually make a big difference in my monthly payments?
Yeah, I'd say absolutely, Maria. Especially if your credit score is improved, you could potentially qualify for something in the 4 to 5 to 6 to 7% range, depending on your situation. Maybe lower. That could substantially lower that monthly payment. Right now, we're seeing an average, say, nationwide of about $148 a month. Depending on the balance and your loan term, um, it can be even more than that. So in some cases, you may be able to skip, like we said before, one, two, possibly three payments, which could free up cash right now. So um, if you're in a situation where your score went up, we can definitely save you some money on that.
Interesting. If they are, if they do opt into refinancing and their credit score has already gone up, would their credit score go up even further, or how would that make an impact there?
Yeah, so great question. There may be a small temporary dip in the credit score, just due to the inquiries. Just like if you apply for a credit card or a mortgage or whatever, they do an inquiry on your credit. You sometimes see that impact on your credit score, but that's usually just for a few points. But in the long run, to your point, Brandon, refinancing can actually help your credit score. It'll reduce your monthly debt. It shows off that you paid off an old loan. And it'll show another loan with a good payment history. So we're very careful to guide people through, the credit journey, so there's no questions, but it does have pretty minimal impact.
Got it. Okay, good to know. Thank you for the question, Maria. Kevin from Florida writes, I'm upside down on my car loan by about $4,000. Can refinancing still help, or do I need to pay down the balance first?
Great question. We see that more and more right now. A few years ago, during the COVID, all the used cars prices went to the roof, and so a lot of folks were paying higher than book value for cars just as a necessity. So being upside down, it can make things more complicated at times, but it's certainly not a deal breaker. We have programs that can still refinance loans, especially if your credit and income are solid. In many cases, we're able to roll some of that negative balance or even all of it into that new loan, so you're not necessarily having to pay it down first. Now, there are situations where someone owes so much more on their car than what it's worth that we can't put it all into the new loan, but we definitely have some creative financing and different options for folks that are in that situation.
Gotcha. Yeah, that makes sense. Thank you for the question, Kevin. And for any listener looking to submit a question live, please feel free to type something directly in the chat from wherever you are calling or listening in from, or call the debt hotline at 801-613-8181. All right. Pivoting back to some kind of more general questions as they pertain to the auto refinancing industry and iLending. I know a lot of listeners wanted to know about, does refinancing a car loan hurt your credit score? And you touched on this a little bit when you were answering Maria's question, but if you could maybe dive into this and kind of help listeners understand what they're kind of getting themselves into, that'd be
Sure.
great.
It's very hard for us to tell you exactly what it's going to do to everyone's credit. As you know, your credit's different than mine, Brandon, which is different from Maria's and Ashley, and everyone else on the list. Um, However, what we can tell you, like I said, is the inquiry is going to generally dip you a couple points. Some folks will tell you every single credit inquiry hits your score. It doesn't necessarily, right? Because the credit bureaus offer you that look back period. They want to make sure you're getting the best deal. So when we're going through our network of lenders, we always start off with a soft credit pull just to evaluate your loan with you. So when you first contact us, I'm not going to do a hard credit pull on you. We're going to do a soft just to see your situation, discuss the options. And at that point, we can make that general decision. Does this make sense to move forward or not before you even have to worry about that ding on the credit report?
Got it. So it's soft inquiry initially, and then a hard inquiry following up once,
Yep.
you
Once we
guys have
determine
that.
if there's a way to go. Yep.
Got it. Understood. Um, Maybe kind of a general question that will be a little difficult to answer, but how much do you think people can typically save by refinancing their auto loan?
Right now, our average, it goes up and down a little bit each month, but as of the chart this morning, we're averaging about $148 a month on our current large car savings. And a lot that $148 a month is including the ability for folks who want to add some of those protection products on their car loans.
Got it.
Gap insurance. Again, we kind of talked about that value a few minutes ago. With so many folks owing more in their car than is what it's worth, we always recommend for folks in that situation, add that gap waiver on your loan. That's going to protect you just in case something happens, so that your car's totaled out. You don't have a big bill for something you're not paying for anymore. So when we talk about that $148 a month savings, that's actually including products like that included in that
Wow.
average.
Got it. Do you find that most people opt into using those products?
Um, the products that make sense for them,
Mm.
right? Not every product makes sense for every borrower. Some folks, if they have equity, we're not going to even talk to them about gap because there's no point in selling a product that's not needed. Some folks trade their cars every couple of years, 2, 3 years. And if they're trading their car every 2 years and they're still under a factory warranty, it doesn't make sense to get one of those vehicle service contracts that take them out. Now, someone keeps their car 100,000 miles. That's a great option, just because it protects that monthly budget. It keeps you in case that transmission goes out. You're not forced to choose groceries or repair bill. You can pay all of it.
That makes a ton of sense. Cool. What else would determine how much someone saves when they're opting to refinance on their auto loan? Is it maybe their credit score or their employment history? Like what can maybe people expect from that side of the process?
Yeah, the things that can impact the savings. One, you mentioned credit score. Obviously, someone with an 800 score would qualify for a better rate than someone with a 580, of course. Other things are going to be, what kind of term of the loan are we looking for? There's, when you're refinancing, there's different goals. Some folks, like we said, are trying to pay off the car as fast as they can, and they don't care if their payment goes up. They would rather just lower their interest rate and pay off the car in a couple of years. Other folks say, I need the most savings that I can get, and they choose to add a couple of years to their loan and stretch it out. And there's some folks who say, I want to pay it off the same timeline and just save money and interest. So those are other, things that can affect that average savings. If someone is more concerned about the long-term savings or the monthly payment savings, those are certainly things that we analyze during that assessment to find out what their goals are.
Got it. During the assessment, are there any special considerations, like like hardship information that maybe the 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 individual wants to provide that gets considered in the process, or is it more based off of kind of the things that you've already mentioned?
There's always that one off. We've had folks who have had maybe they've got an open collection, Brandon, right? And they're saying, hey, I've got this on my credit report, but here's the story why. Being that a lot of our partners are all our credit unions, right? Credit unions are out to help the community that they serve. They're all very membership based. So sometimes if there is some mitigating circumstances, we can discuss it. Not always, depends on the situation. Um, but yes, depending on the individuals, it's always worth a conversation.
Understood. Yeah. All right. Pivoting back to the questions that our listeners submitted. Ashley from Ohio says, I bought a car right before interest rates went up, and my payment is $615 a month. With inflation, it's tough to keep up. Could refinancing help bring this down?
Short answer is yes, actually, that's exactly what refinance is designed to help with, which is great. Um, if your interest rate or long term aren't working for your budget, refinancing can lower your monthly payment and just gives you that much needed relief. Um, and like we mentioned a second ago with some of those products, for those that are looking to better manage their monthly expenses, in your situation, Ashley, where you're saying you're trying to, it's tough to keep up. We see folks all the time that are just getting by. They've got just enough. I mean, that's the world we live in today. People just getting by. And if you have a expensive car repair come up, then you have to, risk. Do I pay the car payment or do I pay the repair bills? I still got to drive to work. So a lot of folks that causes them to fall behind on some of their bills. So some of those protection products cover those repairs of the vehicles, so you don't have to make that choice, and it protects that monthly budget. And so yeah.
Oh, sorry. I was going to let you go.
Oh, no, I was just gonna say, so, the short answer is an auto refi can really create that breathing room in that monthly budget plan for you.
Does someone like iLending help, like someone like Ashley, help make that decision on how to go about their different refinancing, uh, like which products to go with and how to like structure it and things like that?
Absolutely. We get you. It kind of is part of that first initial conversation, that assessment, Brandon.
Got it.
We won't always know what products fit until we complete that.
Yeah.
But during that, we're going to find out, like I said, how long you're going to keep your vehicle. How many miles a year do you drive? Some folks don't drive very often, so they want a longer term coverage, whereas other folks put 25, 30,000 miles a year on their car. So they just want some mileage coverage, not the time. So during that assessment, we figured those questions out so we can really make a customized plan for them.
Yeah.
So they can choose the options. And of course, everything is just that, it's optional, right? So we're there to consult and advise and give you the choices so that you're fully informed and can make the best choice for what your family's needs are.
Yeah, that makes sense. We have a question. Well, first of all, thank you, Ashley. Thank you for the question. Question from Bob that just came in maybe a minute ago. Are auto loans front loaded like a mortgage? If I'm 2 years into a 6-year loan, what percentage of my principal is left? What fees are charged for the refinance, and do they need to be paid at signing?
Lots of good questions in there, Bob. Uh, so we'll start. And you have to correct me if I miss any of them, Brandon. But
Sure.
starting at the top, auto loans are going to be a simple interest loan. What that means is, you know, uh, they're going to take your interest rate, whatever that's going to be, and divide that out onto a yearly format. So if it's, they'll take your 10% or your 8% or whatever your interest rate is, they divide it by 365 days times the loan amount to come up with what they call a per diem charge. So let's say your per diem charge is round numbers, $10. I don't know. Um, I'm not sure your situation, Bob. We'll go with $10. So if you take that $10 a day, that interest is calculated at that. After you make that monthly payment next month, your loan balance is a little bit less. So when they recalculate that monthly interest, maybe now your daily interest is 950. So it is calculated on a daily basis off the current balance. It's not, hey, you have to pay your total interest up front, no matter what the balance is. So it's a little simpler that way. You have control. You're not just paying bank money on the loan that you're not carrying anymore.
Got
Next question is about if there are fees involved. Uh, there's no iLending. We don't have any upfront out-of-pocket fees whatsoever. The fees that you'd be looking at, they are going to be state specific, right? Some states have higher titling charges or fees or taxes. It depends on your situation, the state that you're in. Um, but most every single time those are just calculated into the loan, so that you're not having to put anything out of pocket. Saves, and again, if you can take no money out of pocket, skip a couple months of payments, you're free for a little bit.
There we go.
Did I miss
Bob,
anything?
no, I think you got everything. I think
All right.
Bob gave a thumbs up in the chat. So thank you, Bob. Appreciate the question.
Thanks, Bob.
Cool. We got another question from James from Colorado. James says, I missed 2 car payments last year, but I'm current now. Will that stop me from being able to refinance?
We already talked about a little bit with the economy the way it's been right now. We're seeing situations like yours more often, James. So you're definitely not alone with the situation. Life is expensive now, and it's tough. The good news is we work with the lenders and credit unions who understands that life happens. Missed payments in the past can affect your credit score, of course. So you're still showing your history. The fact that you're current now shows that you're back on track, that you're making the right choices, and that can open the door to the refinancing opportunities. A lot of the credit unions, again, like we talked about, are looking to help their community. So we'll take a look at all the situation and do the best to match you with the right program, but it certainly does not rule you out. Now, if someone is currently, to dive a little deeper on that, maybe someone's like James, they fell behind, but they haven't had the ability to get current again. If someone's currently past due, it's a little tougher to complete a loan. The lender doesn't want to take over a loan that's currently past due, so they'd want you to get current before they could do that refinance. But as long as you're back on track, let's look at it.
Good question, James. That made me think of something where if I'm someone who is considering refinancing my auto loan, how do I know I'm a good fit for it? Like, what are the biggest reasons you see people come in to kind of auto refinance?
Yeah, I would just say if they're looking at it any ways to save money in their budget, right? We all go buy a new car and we get excited, right? We get behind that wheel and it's just fun and it's, hey, this is great. And the car smells new, the radio's fun, the leather seats are heating and feels good. Um, but then 2, 3 months later, that car payment doesn't feel as good. So I think a lot of times when you start looking at that, um, it never hurts just to ask, right? I mean, we have conversations every day where we take folks, let's wait a little bit, or you're in a pretty decent situation. But if you're in a car loan right now and you've been in it, 6 months, 10 months, 12 months, 2 years, it's worth looking at. I mean, the market has changed so much in the last couple of years, especially with the recent rate cut that just happened last week. We're going to see some movements in the rates there. So even if you bought a car 8 months ago and it's not a bad loan, you may be in a position to save some money now with the rates going down.
Yep, that makes sense. Thank you for the question again, James, and thank you for that, Nick. Moving on, we have another question from Latoya from California, and they say, my husband and I have 2 car loans that together are about $1,200 a month. Is it possible to refinance both at once or combine them somehow?
Latoya, you're not alone. Most people are having extra car loans now. It's tough to pay off your car. But many households are juggling multiple car payments. Now, you can't usually combine 2 car loans into one because they want that loan tied to that one vehicle title. So it is tough to combine them into one loan. However, you can refinance both cars individually at the same time, which is actually a pretty easy process to do. You're already qualified for one, do the other car at the same time. Same paperwork can be used for both. So it definitely simplifies the situation. And if you're lowering the payments on both at $150 to $175 a month on 2 loans, and then you get to skip those car payments for 2 loans for 2 months, I mean, that's real money in a household budget. So it just kind of frees up that cash. So I always recommend, if you have different cars, let's look at them all at once. Even if you've got a car loan and your weekend motorcycle, you've got a loan on that. We can help with that too. We have that situation come up with people. They got a vehicle loan and they've got their weekend driver. Let's look at all the options.
Makes sense. If they choose to combine it, maybe like the credit pull on, Latoya, would that be would her credit pull impact her husband's credit pull as well? Like, are you looking at the credit together combined as one entity, or is it are they separate entities and then they're combined after they've been determined individually?
Sure. What we would do a soft pull on both ones, providing that they're both looking to be on the new loan, of course. So if they're both looking on the new loan, we do a soft pull on both of them. And the final credit underwrite would have to do a hard pull on both. That's part of the credit laws is you have to do a hard pull before issuing credit. So they would both have to look at that. Um, but
Oh,
it wouldn't necessarily be, multiple dings again. We would determine if it works on both cars and decide it made sense to move forward before we give them hard pulls.
gotcha. Makes sense. All right, moving along to Robert from Georgia wants to know, does refinancing reset the length of your loan? He doesn't want to be, he says here, he doesn't want to be stuck paying his car loan for another 7 years.
Yeah, great question, Robert. Touched on it a minute ago, but I would say one of the benefits of refinancing is that you get to choose the loan term that works for you and what you want, right? So, like we said, if you want to keep a shorter term and just pay off interest and save long-term money, absolutely possible. Um, Now, to your point, you want to be stuck paying for 7 years? No, but some folks choose to stretch out their loan as long as they can too to get the lowest monthly payment because that's their family's goal right now. I just need to save as much as I can today. We also find that most folks are trading in their car every 2, 3, 4, 5 years. So a lot of times it's like, hey, how much? The goal is not to pay off the vehicle; it is more to how do I can afford my life today. So we can do a long term, we can do a short term. It's really finding out what your individual goals are. I know I've said that a few times, but there isn't a one size fit all option for refinance. Some vendors, some companies, some banks that's what they have. Here's the loan, here's the rate, take it or leave it. And that's just not the way we designed our company at iLending, right? It was very consumer first. We're here to make the consumer's life easier. We're here to help them, families helping families. We've got, like you said before, 200 employees that are all family people too. They know what it's like. So every one of them is not going to make the same choice in a loan either. They pick one that fits for them and what their needs are. So I would just say, Robert, if you're looking to pay it off faster, we absolutely can do that. You're definitely not going to be stuck resetting the term.
Nice. Uh, Thinking about, you know, uh, saving money and just being conscious of paying fees, are there any hidden fees or hidden costs that people should watch out for when going about refinancing their auto loans?
No, not any hidden fees or anything. Everything that we have is, like I said, there is the processing document fee that's generally rolled into the loan. Um, but generally, in most cases, there are no out-of-pocket costs to refinance, right? Like I said, some states have got different processing fees, which for DMV title transfers, taxes, other clients. Uh, but we make sure everything's 100% transparent, no surprises. You don't want to have to worry about your finances and saying, "Hey, did I make the right choices?" Every single dollar of that contract, from the payoff to the titling fees to tax, whatever it may be due, every single dollar is broken out and explained in a way that makes sense and where you completely understand where it's going. Uh, we don't want anyone being left having to figure out and do detective work to figure out if you got the best deal. We're here to walk you through it start to finish so that you understand everything and there's no surprises later when you're digging through your paperwork going, what is that? Like, no one likes that. No one likes to be feel that they were bamboozled.
Yeah,
So we're here to make it nice and transparent and clear.
got it. That makes sense. All right, before we wrap up here, Nick would love to know if there's anything that we didn't cover today that you really want the listeners to know about this.
No, I just think, if you're unsure whether refinancing makes sense to you, even if your situation is complicated, it's always worth checking out. We can you do a quick assessment in 5, 10 minutes, you know, uh, sometimes shorter, sometimes longer, depending on the situation, but it's worth a conversation, right? Maybe it's a matter of, hey, we can save you money, we can't. Maybe you're just looking to get some of those coverage and protection products on your car, even if you're in a decent loan, we can do that too. Um, so it's free to explore the options. So we're here to make it easy and, like we said, transparent and customized to you. So we're here to make it simple and look forward to meeting y'all.
There we go. Nick Goraczkowski, thank you so much. Appreciate your time. And thank you everyone for coming and
Pleasure
listening.
all. Thanks for the questions, everybody.